Hello traders around the world, a decline in oil prices does not necessarily lead to an increase in the price of the UK100 100 index, as it depends on several factors. The relationship between the two is complex and can be either positive or negative depending on the context. Here is a detailed analysis. 1. The impact of falling oil prices on energy companies in the FTSE 100. The FTSE 100 index includes a number of major energy companies such as BP and Shell, which make up a significant portion of the index's weighting. When oil prices fall, the profits of these companies generally decline, which can put downward pressure on the index. Therefore, in many cases, a drop in oil prices may weaken the UK100 index due to its negative impact on the energy sector. 2. The impact of falling oil prices on the UK economy. The United Kingdom is a major oil producer from the North Sea, so a decline in oil prices reduces government revenues from the oil sector. This could negatively affect the UK economy as a whole, which may reflect on the performance of the FTSE 100. 3. The impact of falling oil prices on inflation and interest rates. Lower oil prices can reduce inflation as energy becomes cheaper. This may prompt the Bank of England, BOE, to lower or maintain low interest rates, which could support economic activity and positively impact companies listed in the FTSE 100. However, this effect is indirect and depends on the central bank's policies. 4. The impact of falling oil prices on other sectors in the FTSE 100. Lower oil prices can benefit certain sectors, such as more aviation, transport and manufacturing, as energy costs decrease. If these sectors constitute a significant portion of the index, this could partially support the FTSE 100. 5. The global context. If the decline in oil prices is due to a global economic slowdown, such as reduced demand for energy, it could negatively affect the FTSE 100 due to its impact on the multinational companies listed in the index. However, if the decline is due to increased supply, such as higher oil production, its impact may be less severe. 6. The strength of the British pound, GBP. The FTSE 100 is influenced by the strength of the British pound. When the pound weakens, exporting companies in the index tend to perform better because their foreign earnings become higher when converted into pounds. If the decline in oil prices is accompanied by a weaker pound, this could support the FTSE 100. Summary: a decline in oil prices does not necessarily increase the UK 100 index. In many cases, it may weaken the index due to its negative impact on energy companies. However, it can have a positive indirect effect if it leads to lower inflation and supports other sectors. Therefore, it is important to consider the broader economic context, such as the reasons for the oil price decline, the strength of the pound, and central bank policies, to accurately understand the impact.